Hello and welcome to Edison TV. Today I'm speaking to Dragan Jovanovic, who is CTO at Sterling Digital. Dragan, many thanks for joining me today.
Thank you for having me.
And can you start by introducing Sterling Digital and in particular the rationale behind developing Bitcoin mining facilities on stranded gas assets?
So, before sort of the more recent trend of developing energy assets on stranded gas or on any kind of stranded resource, our pursuit of sort of what brought us to Texas was the fact that we were, as a data center operator, your most critical ingredient of making of having a good bottom line of minimizing your costs is to find the cheapest source of energy that you can find. So normally speaking, countries like Canada, Scandinavia, countries that have loads of excess renewable types of resources typically have those types of energy deals. But if you try to strive to procure something even more cost efficient, then normally those are the pockets that you would lie into. You'd tap into those types of energy reserves which don't have a means to be consumed. And stranded gas is one of those particular types of energy resources that you can. There's quite a lot of them. Texas, particularly, not exclusively Texas. You have many other states that also do this kind of thing. But particularly Texas has loads of oil and gas wells, and a lot of these producers, especially sort of the middle-sized producers, they predominantly drill these wells, and it's somewhat easier to drill, obviously, wells that are located on land than the type of deep sea offshore drills that you find. There's quite a lot of them, and the producers, they typically drill for the oil. The oil is their much larger revenue generating component. The gas is more of a byproduct. Oil is very easy to store and sell. You can just put it inside a tank. You call up a truck. They can tank off like 150 barrels of oil in the right. You check within a couple of weeks. It's really, really easy. Gas, from a physics perspective, is much more difficult because obviously when it's liquefied when it's in the ground, but as soon as it comes out, it depressurizes and it makes it considerably more harder to store. And so if you're a producer that's located in a part of Texas where you've drilled, you've hoped to have the lion's share of the liquids, as we call it, of the resource that comes out of the ground to be oil, but turns out a large chunk of that is gas, and you don't have a pipeline running near you where you can essentially tank off the gas, so you can pipe through the gas. You have a very limited number of options that are inexpensive or that are feasible for you to do. For you to store that gas, you need to liquefy it, to compress it. It's a very difficult process. So what normally they would do is they are just going to flare it, and that's where the term gas flaring is. And that's why if you even Google some pictures of what sort of a lot of these types of, particularly in the western parts of Texas, what West Texas oil fields look like, you'll see a bunch of infrastructure that is there to capitalize, to monetize the oil, and then you see a beam that will it'll look like a massive candle. It will flare a lot of that gas. So that's a very highly wasted resource, and because it's a liability, you're effectively paying money to this producer for taking off what is a liability for them, because on top of the fact that they're not getting any money for that gas, the Texas Railroad Commission, the body that governs the oil and gas industry in Texas, typically there isn't a blanket allowance for you to do that. You have to request for the permit. A lot of them don't have permits. And so what we're effectively doing, or if you're going to develop this type of stranded energy resource, you will come up to that producer and you'll be like, well, listen, I will acquire that liability from you. Sometimes I will acquire that liability from you for free because it's a liability for you. Most of the other times, though, more pragmatically, is you will give them a considerable discount for that gas of what it's trading at on the market, because in any case, they can't put it into the market. And now you achieve this ultra low cost of energy because you're acquiring the fuel for really, really cheap. In any case it was burning, there's a big ESG component to it anyway, because as it's being burned, approximately 5 to 10% of it isn't combusted. And so methane gets directly released into the atmosphere, which is really, really bad for the environment. It's 30 times more of a pollutant than carbon dioxide. Whereas when you pass it through an engine, essentially when you pass it through a machine, an engine that converts it into energy, then you have you capture a lot more, you combust a lot more of that methane. So that was the ultimate goal as to why we pursued these types of opportunities in Texas, because we wanted to really be the cheapest in-class energy producer, and thus Bitcoin mining company with the lowest cost of for generating a Bitcoin. But obviously coupled with something that we've seen obviously in more recent times, in the last 12 months, with the whole AI sector completely taking over the industry, it's kind of added a double benefit to our business model, in the sense that the grid, which is normally where data centers would set up shop onto, because it's much easier to tap into the more expensive on an energy basis, but much easier because you don't need to develop your own energy production capability. It's been so strained because generally AI has a much bigger budget than Bitcoin mining, on a pound for pound basis. And so, they have a much higher tolerance for the cost per kilowatt hour for their cost of energy. And they've come in hordes and they've exhausted these energy grids, and these energy grids they have a certain amount of sensitivity to them that now, if you are a Bitcoin miner on the grid, you're considerably being outpriced and pushed out by these AI guys that have a lot more spending money than you and a lot more firepower than you. And so it even further sort of, inadvertently, it's sort of re-embellished our whole mandate of capitalizing on these types of assets, aside from the ESG perspective, aside from the fact that it's really, really cheap. And so our goal is to develop these types of stranded energy opportunities to be completely agnostic to what happens on the grid. If the grid puts in any kind of policies for things like curtailment or anything like that, you're in control. Your capex is a little bit higher because you have to focus on building your own energy, but ultimately over a long-term period, which is what you are in any way, you're a long-term holder of Bitcoin. If you're a Bitcoin miner, there's only benefits to the whole equation.
Get you. And you're still essentially a startup business.
Yes.
Can you discuss, I guess, what you've achieved so far,
Yeah.
but also what the key milestones are for you?
Sure, certainly, yeah. So I'd say, yes, the business is very much in its infancy, and we achieved most of the hardest parts of the equation have already been achieved well before the business was even conceived. My business partner and I, we've been developing the technology, to utilize these types of stranded energy resources. It's not so simple. It's not so black and white. It's even more complicated than just putting a bunch of natural gas engines and connecting them to a gas pipeline, because the gas in that gas pipeline is much cleaner. It's designed to be combusted through an engine. But when you're now completely isolated, when you're truly off grid and you're just effectively consuming gas that's coming straight out of the ground, it's significantly unfiltered. It's not ultimately in the type of grade of gas that your engine is used to, and so that requires it took a lot of R&D, it took a lot of research and tinkering with all of these engines. I would say that was the hardest part of the whole equation, to figure out how can we effectively and consistently turn that non-engine grade gas into electricity. And so those milestones were achieved well before the business was conceived. So the technological challenges have been done. I think now going forward, now that the business is established and is embarking on its very, very first project, I think the next key milestones are, now that the technical parts are considerably out of the way, the next key milestones are going to be to figure out what's the best way to scale this. There's tons of these types of stranded resources located, like I said, not only across Texas. There's many other states in the US that have it. There's many other places, even more gas being flared across the Middle East and in Africa. So this is kind of in the grand scheme is what we would ultimately like to achieve, is to figure out what's the best way to scale this, what's the best way for us to fundraise, what's the best way for us to pool together the firepower that we need to really take on this industry by storm, to sort of almost create a double-sided solution, the solution for the producers so that they don't have to now continue running the operation with this liability of flaring that gas, but equally to help data center operators like ourselves to achieve a very, very low cost of energy, and at the same time not succumb to whatever type of restrictions that powering yourself on the grid. So to sort of summarize, growth is, I would say, the key milestone, figuring out how we can pool together the resources to grow as quickly as we can.
Great. And you listed on Aquis last year.
Correct,
That's
yes.
one of the class of 2025. What made you choose Aquis as the appropriate platform for your business?
So, I think generally, especially in the UK, not just in the UK, but probably actually everywhere. The US is maybe a little bit of a front runner when it comes to sort of perpetuating cryptocurrencies, and they've been much more friendly to it. They are way more capitalistic. They're in fact the most capitalistic nation in the world. But the UK, as well as Europe in general, is a lot more sheepish and fearful of all types of cryptocurrency businesses. Rightfully so. We've seen all types of things happening with cryptocurrency. Even the big, you have like, FTX, things that happen with that. It's very understandable why it scares people. And so, we found that even well before the company was conceived, we found that generally it's much harder to deal with any kind of big institutions when you're a cryptocurrency business. Something as simple as opening up a bank account, it's still impossible. It's still so impossible, the hoops that you have to jump through in order to open up just a bank account, even for the likes of our business, because, at the end of the day, we are a data center company. Okay, our income comes in the form of Bitcoin, but we're a data center company. We're no different from the type of company that crunches, zeros and ones, whether it's for AI or for, hosting a website or any of that. And yet still, just because our business touches crypto, which is sort of a semi-regulated asset, it makes your life so much more difficult. So we found that Aquis has a more forward-thinking approach to these kinds of newer technologies, getting through all of the hurdles that one would need to typically get. You would probably, with any other, I would say, doing the same thing with another exchange or with another provider, I imagine it would be uncomparably more difficult. Whereas Aquis kind of almost from the very get-go, it gives you a roadmap to how you can do. Obviously, you still have to do all the relative checks and balances, but at least you don't have that animosity that, oh, you're a crypto business, we don't want to deal with you because we still believe the whole industry in itself is in infancy. Aquis has a very, very good appetite for it, particularly because they have a forward-thinking approach towards it. That this industry will grow. It's been around for a long enough time. It's nothing is impossible, but it's highly unlikely that it's just going to evaporate tomorrow. And so setting yourself up with Aquis was substantially easier, we found, and they give you the options to be able to do what you would have to do, and the support that you would need.
Get you. And what have you found to be the benefits of the platform in terms of, I guess, access to capital, access to partnerships, broader profile, and so on?
Yeah. So again, back to my previous point. Generally, we found that Aquis already has quite a lot of other crypto-related companies that have listed through them. So their understanding of the whole ecosystem is much better versed than if you were to work with any other providers. Equally, it's sort of, I would say more of a sort of because of the size of the overall exchange is still considerably smaller than any of the bigger ones. It's more of a family style approach. So when you were, you don't have that many people that have heard about the platform so ubiquitously, but those that have, you immediately, it's almost like a club. You immediately form a bond with them. So things like getting access to different types of resources, different types of advice, whether it be tax advice, whether it be structuring advice, whether it be ultimately fundraising, which is the key part to this whole operation. The different stakeholders that you speak to who have already previously been involved with Aquis become substantially more receptive to it. So it's like a more intricate and close community than you would find somewhere else in a much more broader and bigger ship.
That's helpful, thank you. And what would you say to other development stage businesses who are looking to Aquis as a potential listing?
Look, again, back to my other 2 points, like I said, I just earlier heard that there was only 12 companies that IPO'd last year. I would say, we did it with, I don't want to say it was a minimal amount of effort, but it was doable. And to sort of double down even more on the difficulty of it, we effectively listed as a startup. Okay, in the ultimate, at the bottom line is we're not the technology we brought to the table hasn't come from thin air. There was a lot of work that took place before it. But the bottom line is, at the end of the day, it's a startup that listed on Aquis. So normally you would think that, oh well, look, if a company is going to IPO, it has to be worth hundreds of millions or multi-billion-dollar company. In the US, the standards are, I believe, that you have to list your business once you have 1,000 shareholders or more. So when you think about things like that, then you think, well, I couldn't possibly list a business if we've only got a dozen or so shareholders. That's not the right place for us. Well, clearly, with Aquis, we've easily proven that you can do that, and you can even do it as a startup, which you would think is totally inconceivable. But I would say the biggest benefit that sort of I see in it with it is the fact that, back to the point I made about I was quite surprised that there was only 12 businesses that IPO'd last year in a good way, because I think as Aquis grows, inadvertently, even if we were to just sit around and do nothing, we will inadvertently grow as well, because obviously more money is going to, when people hear about Aquis and your company floated on Aquis, it's automatically, it's an automatic sort of, should I say, marketing stint for you in its own right. So I think from that perspective, it would be it's a strong foundation to have if you're a new business considering whether you want to list on it, because you will grow with the exchange itself, which you won't experience that with the London Stock Exchange or with any kind of alternative market, because they're already so well established. Whereas here you're kind of already pulled in this niche, and as this niche grows, you will ultimately grow with it.
Get you, Dragan. Many thanks for joining me today.
Thank you so much. Fabulous. Thank you.